Hey everybody, good morning. How's it going? Hope you had a beautiful weekend. We had some nice weather down here in Florida. So today we got some good stuff to talk about. We're going to really do a deep dive into which stocks showed relative strength last week, the prior month, and how those stocks are going to play into which stocks we plan to buy today as the market is getting hit and getting hit hard pre-market. It's pre-market. It's 2 hours before the stock market opens. So professional trading says that you need to have a list prior to the market opening, and the higher odds of follow through are obviously on the ones that had strength prior to the sell down. The big thing that we're going to be focusing on today, I'm actually going to do a deep dive into Finviz, and we're also going to do, I'm going to show my trade station setup for how I have it set up for relative strength, relative weakness, how to find stocks in my game plan, as well as how to find stocks after the market opens. I think that it's very important to have both, because you could end up having stocks that were strong heading into the week and those stocks not finding strength after the market opens. So those are the stocks, you're not going to buy those stocks. You're going to look at some other opportunities. Depending on whether you're actively day trading or swing trading, one of the biggest things that we've spoken about quite a bit recently, and especially over the last 3 weeks, is how the volume on rallies, especially in the SPY ETF, were decreasing, and the volume on the pullback or the pause was much heavier. And we'll take a look at what that chart looks like in a second, just to give everybody a recap. So stick around. We're going to be back in just 1 second. Okay, so obviously with everything we do here is for educational purposes, but it's my mission to help you make better decisions. So today we're going to talk about how to make better decisions in what is opening up to be a very challenging market pre-market. So if you happen to not have seen what's going on pre-market yet, this is what we're looking at right now. And you can see here the stock futures are actually down 69 points and actually accelerating to the downside. Now, that doesn't mean we will have a hard time finding stocks to buy today. It's a question of which stocks do we plan to buy after the stock market open. And that's really the whole point of these YouTube videos, is to get into setting up higher probability ideas. Normally we spend this time in Stocks for Breakfast on lessons, setting up things, right? Today we're actually going to, because of the extreme move to the downside, I wanted to kind of go behind the scenes a little bit today and get into the thought process of how to find ideas prior to the market open. I think that a lot of traders, because there's so much technology available today, go right into alerts after the market opens. I think especially on the day trading side of business, and it's probably a mistake because it's very hard to have conviction. We talk all the time that there's 3 different ways to build a list of stocks to trade, which is you trade a universe of stocks, the same list of stocks every day. You run scans on all stocks in the market, and then you actually go in deeper into individual sectors. And I personally think it's easier to create a list of stocks that you trade every day. That's how most active professional traders handle their day and their week. You start to work out to a little bit more where you're both day trading and swing trading. Then it's a little bit more common to have your universe of stocks that you trade all day, every day, all week, every week, no matter what, if they're in play. But then you also start to build longer term positions from one quarter to the next as sector rotation plays itself out in the market. So I just want to say hello to a couple of people today. Richard Gresham, good morning. How are you? Let's see. Abe Harms, good morning. Good morning. John Bates as well, my partner in crime inside the community. Thank you so much. Let's see. Raphael, good morning. How you doing? Raphael, don't forget we have a coaching call this evening at 6 o'clock. Hank, good morning. Good morning. Scott D, how are you? Looking at a couple of infrastructure plays. Okay, yeah, I think all of us are waiting for those infrastructure plays to work themselves into the market. Kenton, good morning. And Carlos, good morning. Is that a Chicago Bull icon there? I'm a New York Knicks fan, so I'm we had a glimmer of hope last year, but I'm a Mets, Jets, Knicks, and Islanders, so I've been out of it for a while. Anyway, so again, if you haven't seen the news, the market, pre-market, hey, Mike Brettenberg, how's it going? Pre-market, the market's down a bit because of this. Again, obviously the reason is always after the fact. And they're talking about the market taking a hit this morning because of China real estate. Look, the reasons always come out after the fact, but the bottom line is this. The Fed, this week is FOMC meeting, and you're going to probably hear the word tapering about 8,000 times this week, as you should, because it's been a big topic of conversation. It's just a question of when. They've already started to pull back. Now I think it's just a question of how far they pull back and if it's going to ultimately affect interest rates. The CPI numbers last week on Friday were not good. As a matter of fact, somebody even say it was a shocking number. So we actually had a couple of things unfold last week, and we're going to hit the charts right now, and then we're going to get into both TradeStation as well as get into Finviz. But I want to talk first a big thing on the charts. Again, so we're actually kind of hitting the skids here. I want to talk about something that was a monster part of last week. And looking at the SPY specifically, you can see how hard we were working the charts last week. And this level here, this was a really, really big level that most people are focused on and have been focused on for a while. So if you go there into Friday, if you remember when we spoke on Friday afternoon, Friday morning, we said that we were looking for this bullish day to reclaim and turn the week positive. So we had Friday, Thursday, Wednesday, right? And we just actually did not. So what I want to do is I want to put that right there because we have Monday, Tuesday, Wednesday, Thursday. So heading into Friday, we had this bullish day here, and then we had a opening lower, but fought its way all the way back to the highs of the day. And this is really where you separate yourself from just a chart reader to trader. You start putting these pieces together and you say, if something happens, then I know I could get in there with a little bit more conviction, a little bit more confidence, expect follow through. If it doesn't happen, then I know to either lighten my positions or just go make another cup of coffee. We had a lot of coffee last week. I don't know if there's any way to tell you. But getting into the chart, so heading into Thursday afternoon, finished, heading into Friday, we had this line in the sand here, which was the opening price on Monday. So what we basically said was that if the market, after 2 days of kind of holding the bid, Wednesday we actually rallied, Thursday we went lower and pushed back towards the high. We said, okay, at least maybe on Friday we can salvage the week if we get back above the opening price on Monday. So that means that the week we turn green, and that would hopefully lead into this week, setting up as a well-bid finish to last week, meaning Thursday and Friday, closed green, and then setting us up to head into Monday with a little bit more conviction. And that would have also meant that the 50-period moving average held support. All of those things, again, go into the context of building an argument for a trade. Now, we also said, if you look on the bottom of the screen, and I'll zoom this out a little bit, the volume was not actually what we wanted to see. So you start to put these pieces together. If we get back above the opening price, if these two last days on Wednesday and Thursday follow through on Friday, if we hold the bid on Friday as well, and we stay above the 50-period moving average, we should look pretty good coming into Monday. It didn't. So what did we do most of Friday? Most of Friday, we were pretty much in lower position mode for both day trades and swing trades, with 3 open swing trades in the community coming into the week. Profitable to slightly, one of them was profitable. The other two were kind of like dancing around break even. But the market did not hold the bid on Friday. We lost the 50-period moving average on heavier volume. Now, one thing we pointed out was that if you run your volume scans like we suggest everybody do, you want to see pockets of opportunity where the smart money is stepping up, buying stocks, and something interesting is happening. Now, you're looking for two things. You're looking for exhaustion or you're looking for fuel. One is ending a move. The other one's starting a move. Friday, we had normally about 10 to 15 stocks have double normal volume when we run our scans at the end of the day. Friday had 62 of them. It was a giant day, but I think that was really more because of options expiration. But the few that mattered, obviously we see here on the chart on the SPY, broke the 50-period moving average on bigger volume. We saw Apple also trade lower coming out of a pause. So we pushed down, already lost control of the 50-period moving average and punched through on heavier volume. And then we also have Facebook, which is just getting beat up on those Wall Street Journal articles about, I think it's called the Facebook Files or something like that. So we spent a lot of time on Friday discussing that it's going to be really hard for the market to hold the bid if Facebook and Apple continue to hit the skids like that. So these big tech stocks. Microsoft, if you didn't see it last week, actually was hovering near all-time highs again. The challenge, and this was after they announced the stock buyback. So that's actually why the stock rallied on Wednesday and Thursday. Wednesday, they made the announcement. Thursday, we got some follow through. We were sniffing right at all-time highs. We're like, okay, at least Microsoft is holding the bid. Even Microsoft gave up the bid on Friday. So all of that going into the day, we had a lot going on. And this is one of the biggest things to be as a part of the community is really understanding when, if you should have position sizing, when you should have full share size, if you should have full share size. So the kind of market that we're having right now where the afternoon, let's just say from like 10 o'clock to 10:30, after the morning orders are done, and you really like to start leaning into some of those active trades, we start to see the market internals clear up a little bit. And this has pretty much been the case for the last 18 months. Where you're seeing positive tick readings, you see the VIX pushing down, you're seeing the trend pushing down, you're seeing market breadth positive. Well, we haven't been seeing that. And this is really what I want to talk about, and especially because of last year. We had a lot of new members come into our boot camp last year who started after the pandemic low. And they have not experienced anything other than the market pretty much going straight up for 18 months. And we kept saying over and over again to those people, look, your strategy cannot be the market always comes back, because you haven't seen the market pull back. You haven't seen where the market goes up, pulls back, and goes down for whatever period of time. And you're just sitting there hoping it comes back, and you completely lose control over all of the stocks that you bought. Now it's time to rethink that strategy. I didn't like that strategy. I don't like that strategy. I don't like averaging down into positions. I don't like trading without stop losses. So it's very, very important that you understand how much you're willing to risk prior to putting the trade on, and then you adjust your position sizing. The current market conditions that we're in right now, and I'll just throw numbers out. If you normally risk $500 per trade, we actually did a webinar recently where the average number, according to everybody in the call, the average risk per trade was anywhere between $500 and $2,000 per trade. Now, there's nothing wrong with that. Obviously, everybody has different risk tolerance, different position sizing that they're okay with, right? Everybody has different position and account sizes, right? But the thing is with this market right now, and again, this is something to write down. It's something we speak a lot about, is the market conditions. And we spent last Friday, if you didn't watch last Friday's video, you got to go in there and watch. We talked about order flow and tape reading, which was in reference to a question that somebody had asked. The order flow and your ability to read the tape will tell you when you want full position size, when you should be risking full position dollar amount on your trade. Sometimes the market conditions are amazing and you want full position size right away. Sometimes the market conditions like we have right now are a little bit less clear and you work your way into full position size. A lot of people don't know that. You'd be surprised at how many people just trade the same share size all the time, every day. And that really essentially means that you are trading without an edge. Because if you believe that every single trade is the same, you don't have an edge. So if you learn anything from our videos from Stocks for Breakfast, the single biggest thing is everything starts with an edge. There's 3 ways to really elevate yourself and become a professional trader. When I say professional, again, when I talk about being a professional, that doesn't mean that you need to quit your job. Okay. As a matter of fact, I don't recommend you quit your job until you've been profitable for a while, at least 6 months to a year. If you're going to replace your full-time income, you need to prove that your trading business can generate that revenue. But the 3 things are, number 1 is risk reversal, which is completely understanding what risk means. Number 2 is order flow, stacking the order flow. And number 3 is understanding how to make money. Once you master those 3 simple things, then trading is really just running a business. But if you skip the first part, which is risk reversal, which is completely understanding, accepting, and trading properly around risk, it's going to be hard for you to trade with conviction. It's going to be hard for you to trade with confidence, because if you're trading too big relative to your experience level and relative to the market conditions, you're going to be scared all the time. You're going to be the scared money. So if you could raise your hand, I know I've been there early in my career where it mattered. I had too much share size, and every uptick and downtick was kind of shaking me out of my shoes. So position sizing, remember, I want you to have that thought process. Risk reversal means that you've completely eliminated the negative energy and the fear of losing money. When you do that properly and you have the right position size and you understand you understand when to have more share size versus working into that full position size, everything changes, because the initial entry now is the right initial entry for that market condition. So that's going to take us over into, I want to take a look at Finviz today, and we're going to take a quick look. I'm going to actually make this a little bit bigger so it's easier to see. You know what? I'll make it a little bit even bigger than that. So with the market taking a hit on this morning, pre-market, Friday, heading into this market today, that scenario that heading into Friday did not unfold the way we were hopefully looking for. Today, you need to come into with the day with looking at ideas for relative strength. So I'm going to pull this up on the screen right now. I'm going to walk you through the thought process, and then I'm going to actually give you a link to get this whole list of stocks, because I actually downloaded them for you in a spreadsheet. As a matter of fact, if you click below the video in the description, you'll see a link there that says Watchlist. So you can click on that list, go, and you'll get this full list while we're going over it. So the thing that we did coming into the day, and let me actually make this a little bit bigger. You can see on Finviz, we always start out with the minimum criteria. So knowing that the market took a hit this morning, we're looking for stocks that have my normal criteria, which is over $1.50 average true range and 2 million average volume. I tend to stay over $10, but this morning I'm going over a little bit more to 15. We're looking up for stocks that are strong for the last month, which means 21 days, stocks that are above the 50-period moving average. So we got a little bit of relative strength there. But this is one of the most important things, and probably one of the most simple scans that you could run before you choose to buy stocks. Now, it depends whether you're a day trader or a swing trader, but just write this down. If the stock market was strong yesterday, which stocks were weak? Which stocks closed negative and which stocks closed with a big red candlestick? If the market was weak yesterday, like it was Friday, like we're opening today, we're going to do the opposite of that. We're going to say which stocks on Friday, or whatever the previous day is, showed relative strength for the last month, was positive on the previous day, and positive from the opening price. A lot of people miss that last piece from the opening price. Positive simply means you are above the previous day's close. But don't forget, you could be positive from the previous day's close, but close on the lows of the day. So how is that a strong stock? This might be the previous day's close, and you might have closed here the next day. But what if you started out all the way up here and you closed all the way on the low of the day? That's not really a strong stock because it lost the bid, right? So what we're looking for is a stock that opened and closed higher, but also closed higher from the open. So if you look at the last column, this is one that you want to make sure that you have over here, is also positive from the opening price. So it's got longer term order flow and confirmed on Friday with stocks that showed relative strength on a day the market took a hit. So change from the open and change from the previous close. So you can see 28 stocks met this list. And then generally what I do, and again, if you click into the let me actually put this into the chat just in case you don't see it below the video. You can click on that link and we go over here. The one thing we want to point out is that the list, when you click into it, is sorted by change from the open. So this is also telling us which stocks were strongest and had the largest green candles on Friday. So that's one way of identifying relative strength. Now, the big thing to remember is that, and this gets lost probably too often, running scans and those ideas being trading opportunities, that's not the same thing. And that's where a lot of traders get messed up. They're like, no, it's in my scan, so that means I have to trade it today. No, this is the list of ideas. Then you have to go into the list and see which ones are in order flow, because again, this just met scan criteria, which ones have order flow now and which ones have room to go. So you would take this a step further. Remember, we sorted this from change from the open. So I'm actually going to come back off the screen and you click on charts over here. And now you start to see which of these ideas are actually tradable today. So we actually had an alert set in APS at $65 in the community last week. See, edit meets the criteria. That's not tradable to me. FULC is meeting some criteria. Snap is not tradable to me. That's stuck in a 2-month trading range. So we're looking for stocks like CERE that have actually broke out. UPST, RCL, which has been hovering above that level. LAC is actually one of the swing trades we're engaged in right now. FUBO is not. So you have to take it to the next step, the next level. Before you choose to buy stocks, you need to know the condition, and then you need to go and have a list of stocks. So now what gets even more fun, for lack of a better way of putting it, is now you take the list of stocks that you had. So let's say you just went through that entire list of 28 stocks. Those are the ideas. Then after the market opens and then after the week opens, now you need to understand how to read the tape, which is taking that list into which ideas are valid now. So we know that right now the market and the futures, again, if you happen to not have seen that before, we're actually trading much lower this morning. So we're trying to build a list of stocks and really a process for finding ideas to buy when the market's taking a hit. So now we're actually going to go a step further, and we're going to first take a look at how the market traded on Friday afternoon, all day Friday. So this is actually, we talk about this a little bit. This is the list of major sector ETFs and the two main market internals that I watch, which are the TIX and the VIX. So then we're looking for pockets of opportunity here to see was anything relatively strong on Friday. So maybe the Russell was a little bit, and we make a mental note of that, okay? XLY was as well consumer discretionary, but other than that, nothing in a really big way. Then we take it a step further, and now we start to do the same thing with the daily charts, and we start to look to see, are there any pockets of opportunity that are breaking out? Are there any sector-related relative strength that we can start to find? Now, there isn't. Quite honestly, if we're looking at the last few weeks, we've seen a lot of stuff pull back. The only thing that kind of stands out here a little bit is the Qs has not, and again, you start to see relative weakness, how far they've pulled back, and we're showing a little bit of relative strength here. Maybe the XLY, we just mentioned that on the hourly chart, but you can see here the IWM. All of that is good, right? So there's two things that I want to point out here. Number one is that's not hard to do, but it's required, okay? So it's required to understand, where am I seeing pockets of opportunity? Remember, I just mentioned before, one of the easier ways to make money is to find a industry group or a sector, and you could either learn a few stocks in that group, or you can trade a couple of different sectors and only trade the market leader. So you have a little bit of more choice as you're looking for the market to unfold. Now this is really where it gets kind of interesting. So I'm going to pull up a different screen here, and we're going to walk through what this screen actually does. So whether or not you have this exact software, it doesn't make a difference. You should be able to do this with pretty much any software. Most of the members of our community use either TradeStation or Thinkorswim or Interactive Brokers. Any software you use is fine. That's generally the one that we use in our community. If you want to learn more about a community, click down. There's a link below. You can learn about the New York method. So what we're going to do now is we're going to do a deep dive into what's going on the screen and some of the stuff that I look for after the market opens. So what you can see here is there's multiple time frames on the screen. Basic moving averages. Again, this is something that I've had so many conversations with some experience, some new traders that come into the boot camp. By the way, our boot camp is 30 days, and they want things to be more complicated. They want things to be, they want to have every indicator that is on the planet to be in there to make a decision. And generally speaking, you'll end up seeing them have RSI, MACD, Bollinger Bands, Keltner channels, everything you could think of. And then it becomes very hard to make a decision. This screen that I show you right now with just volume, a couple of moving averages and multiple time frames, that's the screen that 99% of the people that I've traded with professionally over the years, that's it. I'm not saying the other stuff doesn't work. I'm just saying it's easier to make a decision when you're not trading massive size. I just can't say that any other way. Excuse me. When you don't have confusing stuff on your charts, because the stochastic says it's overbought, but the RSI says it's still going, but the candlestick is breaking out. It gets confusing. You really want to make decisions clearly. And I'm going to walk into a little piece of what we do on the other side. So you'll notice here on my watch list, I have obviously the symbol, the volume, and then this is kind of interesting here. So you can see what we have here. We have the monthly, the weekly, the daily, and the minute. This is a custom build out that we did for TradeStation. And essentially what this is telling me is it's telling me the color of the candlestick on that time frame. So if you think about what this is actually telling me right now, it's telling me that the monthly, weekly, and daily chart and the color of those candles. So if you go back to what I said at the beginning of today's Stocks for Breakfast call, we were talking about the weekly candlestick of the SPY ETF and looking for that to turn green again. So essentially what this scan is doing, both as I do my game planning and as I do intraday scanning, it's telling me and updating which stocks meet this strict criteria right now. Now, the minimum criteria would be that candle would be green. It doesn't take into consideration in what I'm about to show you, is it above any key moving averages? Is it breaking out? Did it hit new alert levels? Any of those kind of things. But what I want to do is I want to give you some ideas to, once the market opens, then how do you filter out those stocks, that list of 28 stocks? So we're gonna go down a little bit deeper, and you can see this list here. If I remove all of this criteria and we just look at the entire list, so you can see the list is pretty big, right? So it's an entire list of stocks that I keep an eye on for the community. Now, we just said coming into the day, stocks showing relative strength. Okay. We also talked about we want to find ideas of stocks that showed relative strength before we buy those stocks. We want the intraday order flow or this week's order flow. Remember, we're not necessarily talking about day trading versus swing trading. Day traders and swing traders have different lines in the sand that matter to them. Day traders, typically it's the open or the hour. Swing traders, usually the week or the month. So we work our way over into. So now just imagine you have your list of stocks. Again, click into the below. You'll see it says watch list. You can click onto that list and get the list of stocks we're talking about right now. What happens after the market opens if you're a day trader? What happens after the week opens if you're a swing trader? How do you filter out the stocks that are showing relative strength? How do you filter out the stocks that are strong today if the market opens at 9:30 and you're looking to be a buyer of stocks on this lower opening? And the biggest mistake that traders make is they focus over here on the net change percentage throughout the day. The way that we do it, kind of a ninja way of doing it, is we start to go over here, which is net change from the open. So think about what we said at the very beginning of today's call. We started to talk about, is the SPY ETF weekly chart green? So that means that we're basically looking at the buying pressure over a certain window. So when the market opens today, the stocks that I'll be looking at from both that relative strength list and this entire list of 250 stocks is now I'm filtering it down by which stocks, when Monday opens, which stocks are positive for the month of September, which stocks are positive from today's open. So as soon as the day and the week opens, I have that list now sorted out. They're strong for September. So that means the opening print on the first trading day of September, and we're above that price. And when the first print happens today, the print meaning the first trade of the day, in all of the stocks that I'm watching, I'm now looking for today's opening price, it to be in sync with the monthly opening price. Now, as the week unfolds, then I switch the monthly for day trading to the weekly. And so let's say today finishes. Tomorrow, I'll start looking at, okay, which stocks are strong this week and which stocks are strong from today's open. So I'm automatically filtering out the thousands of potential ideas and stocks that I'm looking to buy just using the watch list columns. It's a really, really, I'm not going to say ninja, but it's a really good, efficient way of having a list of stocks. Like, again, if you click down in the description, I give you that list, a list of 28 stocks that meet relative strength criteria from last week, strong for the last 21 days, and strong on Friday to be stocks that you would take a look at. They were strong. They're noticeable right now, or they have our interest because the market got hit really hard on Friday, and these stocks had buying pressure on Friday in sync with the longer term order flow over the last 21 days. And they're above the 50-period moving average, which is kind of generally that line in the sand to tell you it's still okay to buy, but you might not want to have full position sizing. So what I wanted to get across today was, as the market and the week is beginning to unfold, especially with the FOMC on Wednesday, there's a lot to unpack this week. If I can give kind of my forecast for the week this week, we're probably going to see the same kind of price action right now in the big picture. We'll be able to find some short-term opportunities in individual stocks to buy. But because we're selling off prior to the FOMC announcement, there's a good chance that we're going to actually end up having a reaction back to the upside after they finally make the announcement on Wednesday afternoon. We'll probably see a move to the downside. All of the dust settle after the selling that we've seen over the last couple of weeks heading into this number, and most likely have a bullish day on the latter part of the week. So maybe Wednesday through Friday. So what does that mean to how you should be buying stocks between now and then? Well, we just broke down in a very meaningful way how to look at the bigger picture, how to run scans, how to find relative strength, how to change that relative strength into intraday scans, how to look at all of the sectors to see if there's some individual opportunities, which, by the way, I want to finish up on that. If we go back into this scan, you'll notice on the bottom, I also have other sectors. I have all of the sectors. Let me just pull this out of here so you can get an idea. So if we go into this and we take a look and we start to see pockets of opportunity, and I'll just use the XLF just as an example, right? Let's say the XLF is showing some buying pressure. Okay, just as an example. Then you need to go into your list of stocks in the XLF, into the financials, and you do the same exact thing and you run your scan. So let's just say last week, which stocks showed relative strength last week, and we'd look at these list of 5 stocks when the market got hit. That's the minimum criteria. So I strongly suggest you watch this video more than once, because I just gave you a complete strategy of finding relative strength in a market where the market's getting hit pretty hard. Obviously, this is your protection in the market. Understanding what you're looking for is really where trading conviction comes from. Before you choose to buy a stock, you really need to understand, what do I need to see in order to be willing to accept risk on a trade? And then once you answer that question, there's a higher level that you need to get to, which is basically, okay, now that I see that there's opportunity, when should I get to full position size? Should I do it on my initial entry because of X, Y, and Z? Or should I put on my first piece, and if other things, A, B, and C unfold, that's going to be feedback from the market, and I could size up a little bit more and work my way into full position sizing. Look, I love to have these kind of conversations because I really want to make you think. I want to make you think especially, and here's the thing. If what we just covered right now, if what we just covered sounds like, wow, that's a lot to think about, you're damn right it is. We're trying to make unlimited income. We're trying to make the stock market make us money. It's not complicated, but it needs to be a process that's repeatable and eventually becomes something that you could do without even really giving it too much thought process. If you want to get to the point where you expect to make money, you have a process for making money, you need to go that little bit extra mile and have this stuff in a step-by-step format. If this is new to you, I'm glad that I'm introducing you to something new. If you've been trading for a while, hopefully this adds to what you've already been doing. Obviously, if you want to do it the same way I do it, just click down and learn about the New York method, and you'll get a whole breakdown of everything that we do. So anyway, I wanted to thank you again. Let's brace for exactly how we just talked about, breaking down the longer term order flow into today's opening price. We have to call it a meeting right now. I just want you to know how grateful that I am that you've joined me today. If you have any follow-up questions to what we just discussed, leave a comment below the video. If you could please do me a favor, click that subscribe button and smash the like button. That would mean the world to me. It lets me know that I'm providing value for you as well. So also, don't forget, click below the video and get the list of stocks that I just posted in there, and you'll have a starting point to pop into your watch list for the day. And then you can set those columns the same way that I just showed you. Okay? Have an awesome day, everybody. Thank you so much for joining me, and go get them today. Take care now.